what is angel tax and how can startups avoid that? Angel tax, for quick background, right, came in because there were concerns of black money and people investing in startups as a way to, convert them, etc. Right? Legitimate concerns from the income tax department, I would say. So, angel tax was introduced in 2012, primarily for private, limited companies. But later on in 2016, the IT amended it for startups as well. So then, that was a time when it was a little bit difficult in terms of fundraising for the startups. So there was like this push and pull, and people were saying that startups need to be encouraged, but we have this angel tax. So 2019, the exemption, for certain criteria, if they're met, exemptions could be made available if you register with DPIIT as a startup. So what is that? What are the criteria for you to be able to avail an exemption from angel tax? First, register with DPIIT as a startup. So for these, there are a few criteria. You have to be either a private limited company or a partnership, registered as a partnership or as an LLP. Second, you should not have had more than 100 crores of revenue, and you should be doing something innovative, something cutting edge to qualify as a startup. So this is very straightforward to apply as a startup with DPIIT. If you need any help with this one, definitely contact us. We will assist you with this, but you probably could do this yourself. One other requirement for as a startup to be exempted is that the aggregate paid up share capital, the premium, everything together should not exceed 25 crores. So if the startup has raised more than 25 crores, then they won't be eligible for this exemption. But so this is primarily meant for early stage startups, up to Series A probably. But beyond that, if you are raising funds with a premium to what is the fair valuation, right? The fair valuation right now, the IT department often goes by the net asset valuation method, or like the startups often prefer the DCF, right? Discounted cash flow. But let's say we have come up with a fair valuation, but someone is giving more money than that premium, then this tax applies, which is 30.9%. So pretty hefty taxation. But as I said, the way to avoid this taxation is two-pronged. One, register with DPIIT, and if you are less than 25 crores, you are good. You don't have to pay angel tax. But if you have raised more than 25 crores, even after you're registered with DPIIT, then you have to be careful with the valuation. You need to raise funding at the same level as the valuation. So if you are a genuine startup, creating jobs, doing something innovative, there's nothing to be worried about. We can ensure that you don't have to pay angel tax as long as you're raising money in line with the fair valuation and you are registered with DPIIT, right? If you have any questions, just leave a comment below. I'll be sure to answer those.